Welcome to Inside the Markets, official podcast of StockPulse.com. With me today, Jordan Roy-Byrne of thedailygold.com. Jordan, appreciate you stopping by the podcast here, and I certainly want to pick your brain in regards to the precious metal sector. But before that, let's pull back here about a month and maybe take a big picture view. I don't think anyone would doubt the U.S. equity markets were certainly overbought and probably waiting for a trigger event like COVID-19 did. But this was pretty swift, so let's run through that, and then we'll get into gold.
Well, the real big picture, what has happened is something. It's kind of a cliche, but it's a short-term bearish development for the market, or at least our market, but an extremely, extremely bullish one long-term. We're getting policy that's potential. It's going to cause some inflation. It's just a question of, does it cause some inflation or really high inflation down the line? So it's an extremely bullish development for precious metals. But what happened in the market, even at the end, going back to the end of February, you had a failed breakout or a false breakout in silver and GDX and GDXJ. Then we had a crash, and then we had a false breakdown at the end of the month with respect to GDX, GDXJ, and silver, because those markets, if you look at a monthly candle chart, you can see where they closed is well above the actual low of the month. Like if you look at silver, before we had the rebound, looking at silver, the takeaway is, wow, this is in a lot of trouble. It's breaking down to a 10-year low or whatever it's at. This is really dangerous. But then it had a really nice, sharp rebound to end the month. So it closed the month, basically above the 2016, 2018 low. So that changes the interpretation. So, technically, we had a false breakout before March, then we crashed, and then we had a false breakdown. So that kind of leaves us where I think we're going to see a lot of backing and filling over this month. But the big picture, this is going to be extremely bullish for the sector. I can't just understate that enough.
Well, let's dig into the specifically the precious metals then, and talk about some catalysts here that might get things going. I thought that QE Infinity would have been a big one. So you said we didn't really hold right there. I thought that would have been one. But certainly now with stimulus package, there's even talk of another stimulus package. Yeah, let's talk about what could really energize gold here. You said there's going to be some backfilling, so I'm expecting that you don't believe anything to happen here for another month or so, or how do you see it?
Yeah, I think that's fair to say, just because looking at gold technically, I was more concerned and more bearish before gold had that huge move back up to 1,700. That to me was really encouraging, that it could rally all the way back up to the high, even though it's correcting now, and it probably will continue. That doesn't concern me. As long as gold, it's in a bullish consolidation right now. It's just a question of, where is the low going to be in this consolidation? And even if it goes back down to 1,500 or 1,470 or whatever, even if it goes back down there and rebounds, it's still in a larger bullish consolidation. So rallying back to 1,700 to me was really encouraging with respect to gold.
Spend a minute here and talk about the U.S. dollar. Certainly on a nice run here. Being the world's reserve currency doesn't hurt. How do you see this going forward here with gold trying to break out? Will it need a weaker U.S. dollar, or can it continue to run with a strong U.S. dollar?
Well, if you look at the chart of the dollar, it's technically bullish. The dollar, that has had some very volatile moves in both directions. But technically it looks bullish to me, but if it is able to break out and keep running, I think that would be that's bullish for gold, but it's bullish for gold more so than silver and commodities as a whole. The weak dollar, it's more needed by silver and the rest of the commodity space. So gold and gold producers can still do well if the dollar's rising, but I think we need to see, with respect to juniors, we need to see some, and silver as well, we need to see a stable dollar or some dollar weakness. If the dollar's running, I think it's going to be hard for silver and the commodities and juniors to perform well on the whole, I would say.
Yeah, let's dig into silver now. Is silver left for dead as a monetary metal now, or it seems like it's pretty out of favor here?
Yeah, it is. Well, technically, I mean, which I talked about earlier, I like the recovery in silver, given that it was able to it closed the month, above multi-year support, so it negated that breakdown, so to speak. So if it can make a similar close and hold these levels, into May, that would be another good sign, just confirming the failed breakdown. But fundamentally, here's the issue for silver. If we step back and we look at precious metals, precious metals are driven by falling real interest rates or negative real interest rates. Now, what causes that? Basically, you either have aggressive Fed rate cuts or you have rising inflation expectations. When you have aggressive Fed rate cuts and you don't have rising inflation expectations that go along with it, that scenario is best for the price of gold, large gold producers, gold royalty companies. It's not as bullish for the other parts of the sector. And that's because when you get, the Fed's cutting rates, it's an economic weakness move. There's worries about recession. Inflation expectations are going down. It's not bullish for the rest of the sector, but it's bullish, relatively speaking, for the price of gold, large gold producers, royalty companies, et cetera. Now, the other side of it is when you get rising inflation or rising inflation expectations, which is just people thinking in the market worried that inflation is going to go up. So you don't even need rising inflation. You could just have rising inflation expectations, especially coming from where we are now, where statistically, we'd have zero inflation or whatever it is, 1%. When you get rising inflation or rising inflation expectations, that is driven, or excuse me, that relatively speaking, that drives outperformance in silver, the gold stocks as a whole, and the juniors. So that's really what silver and the other parts of the sector need is rising inflation or rising inflation expectations. If you go back to 2008 and you use that as a comparison, most things, gold stocks, they bottomed at the end of October. Rising inflation expectations, inflation expectations bottomed and they really began to rise unabated. That happened at the end of December. And so after that point, that is when silver outperformed gold. Junior started to perform a lot better. That's just something to keep in mind with respect to silver and also the juniors. I know I answered more than one question, but it comes down to rising inflation expectations. And while the market can kind of sense that's going to happen at some point, it's, not to get into the virus, but it depends on the virus. I mean, when we have brought that under control and then we see all this money starting to hit the market and the market thinks the economy's bottoming out, that's when you're going to see inflation expectations start to rebound and sustain it. That's when you'll see silver outperform gold.
Yeah, and let's talk a minute here about price discovery. Obviously, there's several ways to play the precious metals markets. You can take the physical. You can certainly play the exchanges, get contracts, however you want to do it here. But let's talk about if there was a run on the precious metals as far as taking delivery. How would that look in your mind of now the paper game that's being played, where we all know there's no possible way to deliver a fraction of that?
Yeah, it's an interesting question. This is a topic that I have to say this is not my area of expertise, but one thing we have to think about is there's a difference between obviously the futures market, the paper market, and the physical market. But all commodities are really traded this way. So it's not just a thing with gold and silver. And if we look at it, it's hard to get physical. The prices haven't fallen. But the same thing happened in 2008. And so, if you're a really big investor, a really, really big investor, and you want to get, you want to buy gold or you want to get physical, you buy that through a futures contract and you try and get delivery. I don't know if enough people would ever take delivery. I think maybe that could happen at some point, but maybe that's well in the future. The other thing I would say is, maybe I think gold having that rebound from 1450 back up to 1700 in like 3 or 4 days, that was probably driven by some supply concerns and some of the things that people like to talk about with respect to hot physical demand, and they can't deliver the metal, et cetera, et cetera. So I think that this could have been one of those times where there was actually a legitimate argument to make there, because that's always been my point. Like if there's going to be a huge run on the metal, or they can't deliver, people are trying to get it, they can't deliver it. You're going to see that in the market. You're going to see that in the market in the futures price. It's because some people have the thing that, well, one day you're going to wake up and the price is going to be $1,000 or $2,000 higher. I don't really see that happening. I mean, it's possible well into the future, but I guess what I'm saying is, we can't discount the paper market or the futures market, because that's really where the big money trades in. And when we're looking at physical demand, I mean, we're talking about coins and maybe small bars. And so that's only a fraction of the market, really. And again, this is something that happened in 2008. So it's important to pay attention to what's happening behind the scenes. But I mean, the paper price or the futures market, that's what I watch, and that's not going away anytime soon.
I know there's several ways to skin the cat here. We talked to most of them, but let's talk about the equities markets. Talk about the CV19, the interruptions, kind of how you see it. Are they in worse shape? Are they kind of neutral? There's certainly a lot of deals out there, but man, you really got to do your research and find the right ones. Hence why you do what you do. So talk about how you see that market, and maybe what's in your wheelhouse, and when will these guys have their day?
Well, I think the thing now, and this is similar at towards the end of 08 or in October when we got that low, and then it took, as I said, it took like 5 or 6 weeks for things to bottom out. We could see something similar, or maybe it takes a month or two this time. I don't know, but anyway, more importantly, the point is what has happened. It's driven share prices lower, meaningfully lower, yet the policies that are being put forth could result in an even bigger, better bull market. And so what I'm getting at here is, I mean, here's an example. I was thinking, before all this happened, there's company, I'm looking for things that can be a 3 or 5 bagger in the next, 18 to 24 months. Now, a lot of those companies, they could potentially be 5x, 7x, or 8x in a 24-month time period. So there's even more upside potential now, obviously. And you don't have to go as speculative. I mean, you can find some really good companies that are lower risk, intermediates or juniors or whatever, that those could still do 2x or 3x or maybe even 4x in the next 2 years from recent lows. And you could move further down the food chain, look at juniors, but they have really, really strong fundamentals. There's some value there. I mean, those are things that could possibly be 5x or 7x in the next 2 years in the scenario where we see gold having a real bull market and going through $2,000 an ounce. So now I know I didn't really answer the question, but to answer the question, what I look for with respect to producers, I'm looking for growth. Because those are the companies that perform the best. I mean, which are the producers that are able to grow, without sizable dilution or taking on huge amounts of debt? Which are the ones that can have organic growth driven by exploration? That's what I'm looking for. And then on the exploration side, I tend to like companies that maybe they have a little value, they've discovered a little something, they have a good backstop so far, but there's a whole lot of potential ahead of them. So that kind of sums up the things that I'm looking for. But I would just say you don't even have to go to the bottom of the barrel with respect to risk and speculation because we've had this crash in the market. I mean, there's high quality speculative juniors that you can buy right now that have even more upside now than they did just a month ago.
And last question here, and I'll let you go. But is there a number? I think there's relatively low exposure to these juniors, certainly in the U.S. markets, these fund managers. Is there a magic number in your head where gold hits, where they'll just start making blanket bets and then all basically boats will rise with the tide. Is there a certain number in your head?
No, but I would. It's not a gold number. I think it's a number for GDX and GDXJ. When obviously GDX is ahead of GDXJ, but when we see those ETFs take out their 2016 highs, that's one thing which I think could trigger, real strong momentum-filled bull market in all of the juniors. The second thing I'm looking at is a chart of GDX against the S&P 500. And that has come close to breaking above a key level. But that is when we see gold stocks strongly outperforming the S&P 500. It hasn't quite happened yet. But when we see that start to happen and sustain it, that's when you're going to see a lot more capital look at precious metals. And then, that will filter its way down to silver and the juniors. So those are two things I'm looking at with respect to, when do we see a real bull market, and when do we see that trigger, a huge increase in buying and interest in the juniors?
Okay, Jordan, before I let you go here, how's everybody follow you and take advantage of your services?
You can go to thedailygold.com. I post all my free work there. I have a premium service available. Get on my free email list. And if you have any questions, you can email me, jordan@thedailygold.com.
Okay, appreciate that, Jordan. Jordan Roy-Byrne, dailygold.com, and certainly look forward to having you back up again as things unfold, and appreciate the insight, Jordan.
Thanks for having me on, Rob. It was my pleasure.